right, so basically, I wanted to go over some basic investing stuff, and hopefully, some other people are in here, some of the newer investors. And so, basically, how I do a lot of the basic investing talks and overall my talks in general are just going to be basic investing about stocks and basic investing in general. So if you've been following some of the market stuff that we've been talking about on the Facebook page and stuff like that, money and cash in general isn't really too valuable in too many different property, different investment vehicles other than in the stock market right now. So, and what I mean by that is, CDs aren't doing too well. Savings accounts aren't doing too well. If you look at, treasuries or bonds or different vehicles aren't doing too well. So, what does it leave you with? And that's what we're going to talk about today. Is basically you're kind of left with the stock market. And so in 2020, we have the COVID and all these problems and people at home and unemployment, kind of at higher levels. Then you're like, why is the stock market at all time and why is the housing market at all time highs? And maybe you're watching this stuff on TV and what's going on? And maybe that's how you got on my page, or that's how you're listening to this, and that's what I'm going to talk about today. Okay, so glad you're here and glad you're listening to this. And so hopefully you learned something. All right, we're going to talk about some stock stuff. I'm going to show you some different options and some different vehicles. And if you have questions, you can go ahead and ask them. I got some other people on here, and you're looking at my screen. You're looking at some charts that you may understand, you may not understand. I don't even understand some of it, and that's cool. That's what we're here for, and that's what my page is for, and I'm going to walk you through some of that stuff too. So, what are some of the stocks we're looking at, and what should you invest in? Some big names that we talk about, like, everyone seems to talk about, and I'll give you some examples, and they may be the right people, they may be the right examples, and it doesn't really matter, right? It's just the principles in general. I'll give you an example about Warren Buffett and Ben Graham, and him talking about walking around his town, looking at trains bringing different devices, different things in, and that's how we started looking at what he should be investing in and stuff like that, and how that was what he thought that he should start buying stocks in, and how does that relate to you, and what you should be investing in. And so, that's still what I do today. I walk around, I'm like, what are these kids investing? And I'm like, these kids all have these pretty cool Apple devices. And what did I do on Friday? I bought Apple at 110, in my daughter's account, because they're talking about 5G and some new devices, and I'm pretty happy about that investment in Apple. And Apple went to 120, but I think closed on Friday. So, and I can show you that trade a little bit later. But those are the kind of basic investments that I want to kind of just talk about today. And those are the things that we're just walking around, looking at our environment and saying, oh, that's pretty cool, and that's what we want to invest in. And we're just buying basic stock, basic equities in these things that are in our environment that we want to be a part of. And there's other companies out there that we're saying those aren't really huge companies. Those are one product. They don't really have a whole bunch behind them, and we really don't want to be a part of those, because that's not something that's going to be a long-term investment, a buy and hold, as some people say, and those aren't really things that we want to be a part of long-term. I'm going to give you a whole bunch of resources today. I'm going to post a whole bunch of things that I want you to look at. I want you to learn about, and that's a part of this. I post all this stuff for free. I don't really. I want you to invest in your future. I care about people taking advantage of their lives and wanting to learn about this stuff. We spend a lot of time on my page and just in general learning what it takes to take advantage of our financial future and basically like learn all this stuff. This stuff. I'll show you this. I mean, these kind of charts take a lot of time, and people spend a lot of energy on this stuff. And I mean, it's really confusing probably now, but I mean, the stuff that we do is what we care about. So, and the reason why I show you this stuff is I want you guys to learn what these kind of drops right here, make people $20,000-$30,000 in a day, and that's kind of what happened last week. And so, and that was on a down day in the market, and so most people know, and most people don't know that you can make that kind of money on a down market, which is pretty cool, right? I think it's pretty. So, all right, let me shut that. Sorry about that. Hold on 1 second. All right, next 2 books I want to share with you guys. Investor's Business Daily, The Can Slim Method. Bill O'Neill wrote the book. It's one of my favorite books. It talks about basically fundamental analysis. I'm going to write that in here real quick. And then my other favorite book is Rich Dad Poor Dad, and that's written by Robert Kiyosaki. I met him in Waikiki in '99, and he taught me a lot of cool things about some real estate investing, but also just about life and what helps people think outside the box and about just investing in general, and what makes people want to take money and make more money from it. So I'm going to go ahead and show you guys a couple other things. Some people ask about what accounts you should have, and I kind of joke about So I kind of joke about Robinhood in general, but this is a Robinhood account that I have to demo, and I have Apple set up. So on Friday, I put Robinhood, or I bought into Apple, and we bought in 110. Um, Robinhood is kind of weird on the charting, but basically, it doesn't show the bottom. So bought in around the bottom here into my daughter's account, and it's actually a pretty decent site. So, oh, stop it, making me come off here. But anyways, you can buy into basic stocks on a site like I said, I bought into Apple for my daughter into her account, and you can just trade. You can trade options or different things, and it gives you different pricing. It tells you some of the basic fundamental analysis stuff that you can learn from the different canceling method of analysis, and you can learn about analyst rating, buy, hold, different things, what the bulls say, bears say, different stuff, learn about earnings, what other people are buying. And, these are the stocks that are big right now as far as if you've been listening about, FANG stocks or, the stocks that, like I said, people are buying right now and that are going to carry the market forward. So Microsoft, Amazon, Facebook, and maybe on this dip going forward, that you may want to be interested in. There was almost an 8% drop in the Nasdaq, and maybe if you missed the drop in March, maybe this would be a time to put some money to work for you. And you can buy it right on a site like this. So it's real easy. You click on like Facebook right here, and then you go trade Facebook, buy Facebook. And I don't have any money in this account, but that's how you do it. And it's something as simple as this. They have some on here for you to read. Some analyst rating, of course. They always have buy rating. Just wanted to show you a simple site like Robinhood, and this is why so many people that haven't been investing are buying into the stock market right now. So I do tend to talk kind of a lot of trash about in people that are new to the market and are investing and on this site. But in general, it is really a good site and it's really easy to use. Feel free to get on here and do it. So, all right, let me jump back on here. Okay. So, all right, I did want to talk about some other stuff. So there's going to be other companies, right, that people talk about, and they're smaller companies. And let me go back into. There's a lot of these, and I'm not sure why, but everyone loves to find these stocks, right, that are these penny stocks before if I can get into this. These penny stocks are these like smaller stocks, and they try to find them, and they try to find the Amazons before Amazon, and they're like small book companies, and that's really great. But they're like one in maybe 1,000 companies, and then the 999, the 999 companies, go broke. And I mean, that's all great, but the reality is you have to buy 1,000 companies, and one of them will turn into Amazon. So unless you're going to buy 1,000 companies, I think I would rather buy. I'm not sure why this one page isn't loading. So, I mean, I have a penny stock page on here, and so I mean, if you want to look at that, that's cool. And if you look at like Kel's Bells on here, she's pretty good um, on my page. But I would just be like kind of weary on this if you're new to investing, because the reality is most of these stocks won't actually be that good. And so if you're going to invest in these smaller companies, just invest a small amount in it, because most of them won't end up being like great companies like Amazon. Most of them will like die out and fizzle out. So make that a small percentage of your portfolio and just do basic risk management. Um, the like I said, one out of 1,000 will be Amazon. 999 will be bankrupt, right? Okay. I'm gonna go through my page here because I think it's a great page, obviously. If you go through my page, there's some investing stuff. Um, there's different stuff on here, but we do some market analysis, some other good stuff on here that I think is cool. So some data stuff, which is pretty neat. That's good for you guys. All right. The other thing I wanted to talk about is some Twitter stuff. So there's some good people on Twitter to follow that some of the bot people will send out, and you guys can look at this if you're ever on here. Um, but in general, I would just look at some of the media that come out right now. If you're new to investing, get your different companies and your different sectors. Like, so this is good. So if I would starting out, start with basic diversification. Maybe a technology company, um, a communication company, and an industrial company, real estate company, and then just energy company, uh, financial, and then just break it up into different sectors, so you're not all basic diversification. And they talk about that in O'Neill's book. That's basic diversification, basic investing. Okay. Like I said, the FANG stuff is all. So in general, these little March to take advantage of that pullback. If you don't know who this guy is, Bill Hackman, I just started learning about SPACs. That's why my page, but the SPAC stuff. Bill Hackman just started a SPAC. I started about it, and the SPAC page is locked down, but I got his SPAC information. That'll be pretty cool too. So, again, more information I even all in on, like the technical Also, stuff is a lot for me as well. The SPAC stuff I'm still learning about stuff, and that's the whole this stuff, and that's kind of why I'm talking about it. Um, and so I'm telling you guys, like, even at, as basic investors, there's a lot of stuff for a lot of people. So nobody should really feel overwhelmed. I mean, I'm willing to come on here and just speak about it. You guys, like, it's for everybody, and it should be open for everyone to. All right. So Moni, I don't even like Robin. I have to go over Robinhood. Everyone's a Robinhood fan. So, I mean, the other thing that we were just talking, I'm gonna, I'll get Sig on here in a few minutes, but we were talking about like seasonality of the market and this like pullback that we had on Thursday and Friday. Um, but and we were looking at a few charts, and we've been looking at a pullback. Thursday and Friday, like I talked about. And so we may see that. So that the time frame that I was looking at on buying some of the stuff that I bought, on Friday for my kid or whatever is, we're looking at 12, 18 months. And so if if you start buying some of this like longer term, like FANG or internet stocks, like I was talking about Apple, have a good or longer term. Um, you know, and if you don't have the money saved right now and you just want to look at investing, I mean, just put it into their savings account. You're not going to get any CD longer term, uh, account. There was an older lady she was like trying to save money, and she was talking about a CD or another account, and there's nowhere to put any money right now. So she was talking about buying stocks and it. So go ahead, Sig, if you want to continue on with.
Yeah, can you hear me?
Yeah, you good?
All right, cool. I'm gonna try to see if I can. I'm gonna send an update on this file real quick. This is a good example. They all mirror themselves. But yeah, I think there's another dip coming. That's the way it looks like to me. And what we're seeing right now, this little jump that we're seeing, is a retracement. It's like some of the like when you guys are doing the when you guys are doing the scalping, and it has a little small pullback, and you guys are buying the calls while it's in the pullback, to sell it off. This is that on a bigger version. So if you click on that screen, and you just buy right here on a 5 minute. I know you're gonna see a whole bunch of lines. Like I said earlier, this is kind of like this is my thing, and this is how I can see it. And I like to go back and look at other things that I've seen that or things that I noticed in the past, and it kind of helps me out with support. But this pullback, it comes down to this that 0.382, which is again a line of support on this whole structure. And when it pulls back, if you're looking at the yellow fib that's inside, right, it's pulling back to looking for that 0.5 pullback, right? So if you look on a smaller scale, the price action is going up, and now it's pulling back to that red and green moving average. That red and green moving average, that fib that's right there, the white one that's lined up with that one, it lines up to the 382. So, like Steph talks about in his piece, most fourth waves pull back to the 382 before going in and put it in that fifth wave, and that fifth wave will line right up with 0.05, which would be $346.58. And then after that, we should see a new, there is something to pull it back down to where I'm looking at, where I have lined up with the yellow boxes. I have two gaps there that I outlined in the chart, which also lines up with the 0.1618 retracement right there. So I definitely see we go up. It looks like a B wave. It could go as high as 0.618. I think it does with how much people like to see stuff go up, and then it just gets pushed right back down. Again, this every time we look at this, man, it's calling for one thing, and then you see that a whole bunch of people get excited about it going back up, and then you see a whole bunch of people buying, and it'll skip the gap. So there's no guarantee. It could come back down and just retest that bottom that it put in, and once it confirms that as support, it could keep moving up and put in a new higher high.
Yeah, and I mean, and that's like the difference. Just so everyone's following is like, we're like some of us are trading this, and that's what we were talking about earlier. And so we're gonna have some downside protection. Like I have some longer term market, but there's definitely some reason to have some downside protection. And so you saw that on Katie's stuff. Is that what you're saying?
No, I didn't see this on Katie's stuff, but just reading Katie's stuff, it aligns with with the price action and what it's doing. You see what I'm saying? Katie's stuff called for a pullback that would last about 2 to 3 weeks. The pullback that I'm looking at on here, once it goes up, we're looking at about 2 more. I'm saying by September 11th, we're looking at the next piece going back down for a further drop. I mean, it's going to be, it could go either way. That's just my, my educated guess, which is,
I'm educated. She's doing it on SPX, which is a little different. But I mean, it's so, and that's the other thing. Like we're so that futures market, and this is what we talked about a little bit on. I was talking to someone else. Like the problem is a lot of the indices are like super weighted right now on certain tech companies, right? And so when they start to fall, they're just really messing up a lot of the indices, and specifically QQQ and SPY. So it's just really weighting them down. But
I definitely see another good day like you guys just had. Like those last couple days, man. I think I definitely see a couple more days like that coming up, man. If you look at the dates, bro, it lines up because we come back. The market opens on the 9th. The 9th, we continue. We come down, catch support at that 341 level, push back up to that 346, right? Put in another high right there, and then potentially overdo it a little bit and come into around 349, and then pull back even harder, man. And it'll line up 2 days? That's 2 days of price action right there, bro.
Yeah. No, and that would be real nice. And it could make everyone another 1,200%. That would be nice for everybody. So, and the way to do that right now, and just so you guys know, on options. It's like put it. I mean, you got to be 5-7% out of the money on the put side, and just let them sit there and those are cheap, right? Those are going to be those should be like 40-50% or 40-50 cent options, and they should be real cheap, and they should be way out of the money, and put it there as protection. If you don't know what I mean, then message me and I'll help you out to just put that in as protection. But if you're just in this thing, just listening as and want to buy these dips and just buy them as the market goes down, just buy good stocks, long term, and you're talking 12-18 months down the road, then I think it makes a lot of sense to do. And as I've always said, you nibble in, you buy these good stocks, right, now, buy them again when they go down a little bit, and you get in on a good cost basis, and you're not going to be, you're not going to be in a bad position in a year or two from now. You're going to be in a great position and be real happy. So, anyways, what else you want to post? You want to post? You have other charts, some of the FANG stuff, longer term, or what else do you have?
Anything? I mean, as far as like anything good other than DraftKings that I like.
DraftKings is good. I like that company. It's actually good.
Yeah, DraftKings, man. I'll just post. I will just post like a big picture one. I don't want to go all the way in the weeds with it, but we just pull up the chart.
And then if anyone has any questions, I'll be happy to answer them. We like Webull too, right? Webull?
Yeah, Webull's definitely nice.
Webull is another good company. If you don't like Robinhood, they're for basic investing stuff. They're fine. I like Tasty. Trade. They're out of Chicago. Like them, if you like them. They do stocks, they do futures, they do options. And then
that's my DraftKings. That's my long term. We're talking about definitely not this year targets. You know what I'm saying? But longer term targets that I see up there in the red. Shorter term targets, I got in the green right there, just in case anybody's trying to swing trade it, scalp it. I did a couple swing trades on this, made like $600-700 a swing trade. Nothing crazy, but with that, I put 1,000 in at the bottom of these dips. We're just selling them at the top at a 50% at a 0.5 retracement or 0.618 retracement, and was making $600-700. Took like maybe like a week at a time too. But long term, yeah, I definitely I'm not
Yeah, I've had MGM for a little while. That's been
look at it. Yeah, I got it. Mike Green.
Hey, Chris, you have anything?
No, nothing too exciting. I can talk about data miner and how we use that if you'd like.
What's that?
If you want to talk about Datarama or data miner, I can talk
do
about
that.
how we integrate that. So Datarama, if you guys see the Super Investor channel, so basically what that represents is every super investor has to, these are $1 billion investors, Bill Hackman, folks like that they talked about earlier. Those folks, unlike you and I, they have to report what they're buying and selling for the most part. So company CEOs, CFOs, technical directors, when people like that make substantial moves in their investments, one way or the other, by buying or selling, it's it's telling as to maybe they know something that we don't. And while that data is not 100% real time, it's usually within 12 to 16 hours is what I found. So if you go look on there, and you can go to datarama.com, it's free. But what I do is I go on there several times a day, and if there's something significant on there, so like I think the other day there was one for Camping World, and three or four different people in the company were buying a lot of shares of Camping World. So I went on, did some just 5 minutes of research, looking at their stuff on their charts, um, and I bought calls and I sold them for a profit 2 days later. um, the same thing goes with puts. So you can look on there and see, if a CEO sells 40,000 shares of his own company, it's indicative that something might be happening. So you're safe to buy some puts there. But at the same time, you have to do a little bit of research, check it out, and make sure that it's not some fluke or somebody getting fired or whatever. Now with the data miner stuff, different tab. What data miner does is it scrapes the Twitter fire hose. The Twitter fire hose is essentially everything that people post. You may not see it, but it's basically every single tweet that comes through. Data miner will see it and analyze it based on stuff that you determine to be important. So the way we use that is whenever something significant happens based on our search criteria, I'll post it in there. So you can take the time to look. Datarama. It's datarama.com. So whenever we post something in Data Miner, basically you can take a few minutes to look at that. A lot of pharmaceutical stuff pops on there. A lot of FDA approval stuff pops on there. But we have the ability to put any search name we want. So if there's something specific that you guys are looking at, just send me a message and we can add it to that as a search criteria. So the other cool thing about that is, once something comes out in Data Miner, it a lot of the technical analysis stuff, and I'm not a big TA guy, but a lot of these charts, you hear people saying they just need a reason to pop or they just need a reason to drop or all those things. I can't really tell you exactly when it happens. I mean, what was it, 8 months ago? Steven was talking about Tesla going down, and it just needed a reason. And the reason was the split. We just didn't know about it back then. But it was almost perfect based on his predictions. We still think we're going to go down a little bit more. But, news like that pops in Data Miner first that we can be made aware of, and then have somebody check the technical analysis and see if there's a reason or if it's waiting for a reason, we can get ahead of those things and make a ton of money doing it. So that's why we're doing it. We're always refining it, and we're always open to keywords and all that good stuff. So that's about it on those two.
All right. Well, I don't have anything else. So we just needed some time. We were just hanging out today. So if you guys don't have any other questions, that was going to be it today. And we'll see how this next week. So, like I said, hopefully we see a nice little pullback and hopefully we're ready. We had a nice Thursday and Friday, so I'm to share some more information. And if you guys don't have any more questions, that'll be it for today.